So, this is your first time filing LLC taxes this year, right? If that's the case, I want you to really listen carefully because I'll be spilling a lot of beans today. I'll be giving you baby steps to make sure that you file your LLC taxes properly. Don't you go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, we want to talk about filing LLC taxes for the first time this year. First thing first, you need to ascertain. In other words, you need to ascertain your structure. A lot of people believe they have an LLC, but in reality, they have an S Corp, or they have a C Corp, or they have a partnership, whatever they have. So it's very important to confirm your structure. So that's the first thing. If you are a new business owner, you need to know what structure you have before you file. Okay, you need to know how your company is structured. This is important because the structure of your business determines how you file. Okay, for example, if you have a C corporation and you're thinking, well, I have an LLC. Well, C corps file taxes and they pay income taxes at the corporate level, but also at the personal level. Both S corporations and LLCs have, or they are pass-through entities. In other words, they don't pay taxes at the corporate level. So it's really important that you know. Okay, so what it really boils down to is if you are a single member, you file on Schedule C. If you are a multi-member, you file on a partnership. Let me repeat that. So if you are a single member LLC, you will file your income, losses, and all the deductions, everything on a Schedule C of your Form 1040. But if you are a multi-member, you file Form 1065. You file on a partnership. Okay. If you think you are an S corporation, you should basically have made an election on Form 2553 and received confirmation from the IRS. The thing is, do not do anything before you receive confirmation from the IRS because there are consequences depending on the legal structure that you have. Very important. So step number one, sit down and you want to analyze, you want to ascertain your structure. Remember, companies set up as an S corporation, which often have Inc. or Corp. in their name, need to file Form 1120 or Form 1120S. They cannot file a Schedule C. Okay? So, recap here. If you're a single member, Schedule C, Form 1040. If you're a partnership, Form 1065. If you are a C Corp or S Corp, you need to file Form 1120 or 1120S respectively. The second thing I want you to do after ascertaining your business structure, you need to seek help. The thing is, this show will do a lot to actually explain things for you, but depending on the state where you're in, depending on your situation, your company's situation, it's important to enlist the help of a professional, somebody who understands the subtleties of taxes for the specific business that you are filing taxes for. Very important. So do not be afraid to ask for help. Okay. And again, you can actually have a CPA, a certified public accountant. You can have an EA, an enrolled agent. You can have a tax attorney, somebody who has expertise in the specific industry you're in. Because like doctors, lawyers, and many other professionals, accountants may specialize in particular areas of the tax system. Okay, very important. So take the time to shop around and find an accountant who knows how to file taxes for a small business, especially for LLCs. If you need help, please drop us a comment below. We'll certainly refer you to one accountant in your area. And it's very important. Now, one thing I want to say here is that the more complex your LLC structure is, the more specialized staff member, the more specialized expertise you need. For example, If you are a single member LLC, you really don't need, you could do things on your own anyway. If you're a single member LLC, you can actually file on your own, not a problem. But if you are a multi-member LLC with, I would say, more complex operations, you really want to seek expertise. And here I'm speaking about someone who has a CPA designation, all right, so certified public accountant, or an enrolled agent. So enrolled agent is somebody who has been recognized by the IRS as having the expertise to file income taxes, and income taxes for businesses and individuals. Very important. So at the end of the day, don't think about just cost. You got to think about quality. You got to think about an IRS audit, because the thing is, if you just go ahead and file on your own, and you have a complex structure, business structure, and the IRS notices the errors and other mistakes in your tax filing, they could actually start a whole process you don't want to be involved in at all. So it's better to actually invest the cash, to invest the money, and get expertise right off the bat, so you know exactly that you are getting quality work. Very important. The third thing I want you to do, again, we are speaking about filing LLC taxes for the first time this year. Number one, ascertain. Number two, you want to seek help. The third step you need to follow is to get ready. See, the whole thing is you got to have your records ready to go. Okay, I'm speaking about your EIN, your employer identification number, your articles of organization. If you are an LLC, you are looking for an article. You need to have your articles of organization. You need to have your operating charter. You need to have your certificate of good standing, depending on the state you're incorporated in. Okay, very important. So those are foundational elements that you need to have. And you also need to have your financial statements, right? We're speaking about your balance sheet. We're speaking about your statement of cash flows. We're speaking about your income statement. We're speaking about your statement of owner's equity. This, you can have it through your accountant, or you can have it through your accounting software. It can be Expensify, it can be QuickBooks, it can be Wave, Xero, and whatnot. Very important. Okay, you need to review the business tax return completely. So what I'm trying to say here is that depending on your structure, if you are a single member LLC, you are filing Schedule C. All right, so I want you to go through your Schedule C, look at the expenses, look at the income, and make sure that everything ties. Okay, if you use tax software, things can be a lot easier. All right, and so that's if you are a single member LLC. If you are a multi-member LLC, you need to look at your Form 1065, and also very important, the ancillary Schedules K1 that you need to actually attach to the Form 1065. Remember, the Form 1065 is an information return. In other words, you don't pay taxes at the corporate level. Okay, you're just providing info to the IRS and say, listen, here is how much we made. Okay, here's how much you make, and we made. And the thing is, the IRS wants to make sure that you send Schedules K1 to each partner of the LLC. Very important, okay? And be sure to use the correct forms. Be sure to use the correct forms. I just said it, okay? Single member LLC, Form 1040. Don't forget that you actually also need to make sure that your Form 1040 Schedule C actually how do I say this? The information that you have at the business level must tie to the information you have on your 1040. Because if the IRS, God forbid, were to audit you, this could be problematic. Okay, very important. Step number 4, you want to segregate. This step is so quintessential. I mean, the IRS has been known to audit people, and the last thing you want is to have for your very first tax filing to have the IRS audit you. You don't want that. So you want to segregate. You want to separate personal and business expenses. Very important. You got to have a process in place whereby your personal affairs are distinct from your business's affairs. What does that mean? It means that you need to have a business bank account. You need to have a complete filing system for your business records, so that when if the IRS were to audit you, they will see that you basically you're basically very organized. And this is especially true if you work from home. If your business is based in your house, you need to be really careful about making sure there's no mingling between your personal affairs and your business affairs. So trying to get a business bank account, trying to have a separate folder, have a specific space in your house that you can dedicate to the business. Make sure that you have a business credit card if you qualify. Okay, if you don't qualify, make sure that you have 2 or 3 credit cards and use one personal credit cards for business purposes, so that anything you charge on that card, at the end of the year, you can just look at the statements and just export things in CSV or in Excel, and you can just run the numbers and see how much you spent. Very important, okay? And so the thing is that always make sure that you have a separate checking account for business purposes, and very important. Same thing with a credit card, okay? You need to choose an accounting basis. Remember that you have 2 primary accounting basis. You have the cash basis and you have the accrual basis. Now, when you think about, if we were to dig a little deeper, if we think about the generally accepted accounting principles accepted in the United States, you need to choose the accrual basis. However, if you're a small operation, you just started and you're just trying to find your ways around, trying to see exactly what happens, you can go with the cash basis, not a problem, okay? But later on, as you grow, if you want to do things legit, you cannot stay under the cash basis. Very important. You also need to choose a depreciation method, okay? And this is something that's very important. We have covered the depreciation topic on another show, so I'm not going to go into details here, but it's very important that you choose a method that actually fits with your operational history or the kind of business you have. But if you have any question about the depreciation method, please drop the question below. We'll certainly answer you. Not a problem. Now we have the interesting part. This is very important. Now you want to start actually making money. No, let me just rephrase that. You need to write things off so that you can reduce your tax liability and hopefully get a refund. Who knows? Okay. So you need to take advantage of deductions. It is to your advantage to minimize your taxable income, right? So doing so reduces your tax penalty and puts more money back into your business. However, there are right and wrong ways to do this. Illegal activities such as tax evasion and fraud are obviously the wrong ways, right? So the right ways include what? Taking advantages of the many tax deductions available to small business owners. And we have actually covered the constellation of deductions that you can actually write off, you can take rather, on LLC, S corporation, C corporation, or just on a regular tax return for a business. Okay, the most obvious deductions are your business related expenses. Fortunately, this is a very broad category. So any expenses related to your business are deductible if they are necessary, ordinary, and for a reasonable amount. Though this is the trifecta by which the IRS goes. Very important. Let me repeat that. Any expenses related to your business are deductible if they are necessary, ordinary, and for a reasonable amount. In other words, you cannot say that you are paying $10,000 for electricity in your house. This doesn't make sense, okay? Deductible business expenses can include banking fees, advertising, software purchases, business asset depreciation. By the way, depreciation is a non-cash expense. In other words, it lowers the incomes, it lowers your operating income, but it does not reduce your cash position in general, okay? And you can also actually deduct mileage deduction. So mileage, health insurance. And also remember, you can also deduct self-employment tax, because when you are self-employed, you must pay the Medicare and Social Security taxes that an employer would otherwise pay for you. Fortunately, 50% of your self-employment taxes are deductible. This is really good. So overall, what you have to do is that you have to have a list. It's not really that complicated. Again, if you have a simple structure like a single member LLC, you should be good to go. But if you have a more complex structure, this is what I was saying. It's just a lot better to hire an expert. But it's not really that complicated to list down all the expenses that you have. By the way, if you need help, again, you can drop us your question down below. We'll certainly get back to you. Not a problem. I'll be right back right after this. Don't go anywhere.
He ain't never gonna leave, no. He did the night run.
Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a passionate conversation about filing LLC taxes for the first time this year. And the sixth step I want you to follow right now is to amortize. What does that mean? You need to understand startup expense deductions. The thing is, there is a distinction to have between amortization and depreciation. Okay, I'm just going to simplify a very complex topic, but you amortize intangibles. You amortize things you cannot touch, but you depreciate tangible assets. So you depreciate equipment, you depreciate machinery, whatever. Okay, so many small business deductions apply every time you file small business taxes. However, there are special first-time small business tax deductions that you can only take advantage of this year. They involve your startup expenses or the money that you spend to get going before opening your business. This is really cool because the IRS basically is allowing you to write off whatever you spend money on to get your business going. This is fantastic. So deductible startup expenses may include investigating how to create a successful business. So in marketing terms, we call it market research, right? You can deduct accounting and legal fees. So if you have had accountants, lawyers helping you in the setup of the business, and they charge you, you can actually write off whatever bills they sent you. Licenses and permits. So initial, those are costs that you can amortize. Advertising your business, opening, very important. Training employees, equipment purchase or rental. So as always, restrictions and guidelines apply. So during the first year you are in business, you can deduct up to $5,000 of your startup cost. If your startup cost exceed this amount, you can deduct the remainder over the next 15 years, dividing the amount equally per year. Okay, so for example, let's say that you actually spend this year let's just make it very easy, $55,000. For this year, you can only deduct $5,000. And the remainder, in other words, $50,000, you have to divide that by 15 years. And you have to every year you have to actually write off the exact amount, okay, to actually make things happen. So if we were to say, I think 50,000 divided by 15 is more complicated. But if you were to take your total startup costs were, let's say, $50,000, and you deduct this year $5,000, this will be $45,000 remaining, right? So over the next 15 years, you deduct actually $3,000. In other words, $45,000 divided by 15 every year. So $3,000 every single year. So before we close today's conversation, remember, this is important, and this is so important that we actually have an entire section for it. Remember your home office deduction. The thing here is that the IRS is very careful, and they actually, if they see anything unreasonable, if they see anything, I would say, outlandish, they will audit you. You don't want that. So sole proprietors in home-based business locations should consider the ability to deduct a portion of their residence as a business deduction. So if you are a single-member LLC, or even a multi-member LLC for that matter, actually having a home office, you can deduct a lot of things. To be successful in this widely contested area, the business area used in the home must be used exclusively for business. In other words, you don't want to have your kids' toys, actually be on the floor in your office. No, it has to be exclusively for business purposes. As a business owner, you would measure both the square footage of the home used for a business and the total square footage of the home. The resulting percentage of business use will be applied to home office expenses to determine the amount to be deducted. If the business has a loss, then a home-based business deduction is not allowed, but can be carried forward. Okay, so in order to properly account for the business use of the home, you as the business owner, you must first deduct the percentage of the real estate taxes and mortgage interest that would otherwise be taken as an itemized deduction. If there are still profits remaining, then other home expenses such as landscaping and general home repairs will be allocated to the business and personal portion, and a deduction will be allowed for the business portion. Again, it's all about the percentage you had when you divided the square footage of the home used for business by the total square footage of the home. Okay, so this is important, and you also need to think about depreciation. If there is a profit, then depreciation on the home is allowed on the business portion. Okay, to calculate depreciation, the cost of the home must be allocated between the cost of the land, which is not deductible, and the building. And the building must then be allocated between the business and personal portions by the percentage calculated earlier. Very important. Now, the resulting depreciation deduction is then written off over almost a 40-year period, 40 years. And the actual annual home depreciation expense would usually not be more than a few $100s. Another thing I want you to remember is you got to think about non-employee compensation. You know, like when you actually have those contractors helping you got to think about it. Very important. So if you pay them, you need to see whether or not the government must be notified of their non-employee compensation. So your employees receive a W-2 form to identify their income and withholding taxes. Any contractors who make $600 or more will receive Form 1099 NEC from you. And the federal and state government will also receive a copy. So you are actually sending copies to state and federal authorities to know what's really going on. Okay. Now, contractors who are corporations are exempt from receiving this form, but partnerships and LLCs with more than one member must receive them. Okay, very important. Now, if you wait until the end of the year to obtain the contractor's Social Security number or employer identification number, you might not be successful in obtaining their required information. So you want to have your contractors fill out Form W-9 to give you the needed information. Don't wait until the end. Okay, very important. So also plan for paying self-employment tax. So if you are a single member LLC, because again, we are speaking about filing LLC taxes for the first year and for the first time this year. And the thing here is that you can be a single member LLC or a multi-member LLC. If you happen to be a single member LLC, then you will file as a sole proprietor. Now, the thing here is that profitable sole proprietors are sometimes surprised to find that self-employment tax, in other words, Social Security and Medicare tax for self-employed individuals, can be a significant part of their total tax bill. So be sure to calculate these taxes as part of your total estimated taxes when paying quarterly estimates. Very important. Okay. Remember, when we speak about self-employment, self-employment tax. We're speaking about Social Security tax and Medicare tax. Okay. So be prepared for a tax day surprise. Not only is the balance due for last year's taxes, but also due is the first quarter installment of the next year's taxes. So cash flow must be monitored to ensure that these funds are available. Very important, okay? And but again, remember, you can always ask for an extension, but asking for an extension does not actually absolve you of the responsibility to pay your taxes on time, okay? But you always can file for an extension so you have more room to breathe. Everything is possible. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about filing LLC taxes for the first time this year. So we spoke about ascertaining, seeking help, getting ready, segregating, writing things off, amortizing, and remembering certain important criteria. Thank you. I'll see you next time. But until then, remember, stay marvelous.